All right, everybody, welcome to Coffee for Closers. Alex Wellings here. We're talking with Mr. Johnny Rozier today, top producer here at Megastar Advisors. Got Rick Kallmeyer here, of course, as always. And we are talking about some real exciting stuff Johnny brought to the table. How long ago was it, Johnny? We were talking earlier this week or last week about the CD alternatives.
Yeah, I think it was last week.
Well, last week we talked just a tiny bit about a case that Johnny was working on, Rick, where he had replaced a CD, and he wanted to kind of chat a little bit more about that process. Maybe that advisors hadn't been speaking as much about this topic as maybe they should, or maybe they're still finding them. But we know in this business that for the last, decade or so, the CD world has just been on a collision course with the zero interest world.
Absolutely. Negative.
Almost an embarrassment we were talking about before the show. It's an embarrassing thing to sell for these bankers. But Johnny has been approaching it maybe in the last week or so. First off, Johnny, welcome to the show.
Thank you. Glad to be here.
But for like the last, I don't know how many weeks or so, you said you've been running into this situation more and more frequently. And it's become something that you wanted to come on the show and talk about, and I completely agree. Yeah. We've certainly had a few advisors talk about the same scenario.
Yeah.
So, Johnny, maybe run us through what happened, or maybe just run us through what you found out, and then we'll just unpack the whole scenario.
Yeah, just a coincidence, and it was existing clients, so a little bit easier. And in our little small town, they come by and have coffee. And anyway, but this particular client came by and just said, "Did I have a few minutes to chat?" Well, actually, I really kind of thought something was wrong. Maybe he didn't like his annual report or something like that. And he brought up the subject of CDs renewing. And of course, I knew where we were headed with that then. And since then, we've had other clients bring that to our attention. But, and like I was telling you before we started recording here today, years ago in my MetLife 20 years, we actually did ask people, just whether we were offering life insurance or rolling over money or whatever. We always ask them, when does your next CD, if you have one, when does it renew or expire? We kind of use the word expire. And we just kept a log of CD renewal dates, and we called people back. And that's what we're starting to do with our team now. I tell them, and I think we all get kind of stuck. If you're in the federal market, you think you're supposed to replace Figley Life, do Pension Max, or roll over TSP money. And I don't even know if we even ask federal employees if they have 401k money where they used to work, or if they just got a CD that's renewing. And especially, retired people, they tend to have that old CD that they had back in the 70s or 80s when they could get $8,000 or $9,000 a year interest on a $100,000 CD. Obviously, that doesn't exist. But the main reason people have money in a bank savings or CD is liquidity, but mainly it's because they've always done it. It's just complacency. They don't know anything else to do. So I would say that's the main reason they're there. The client we talked about prior to the recording beginning, they literally had close to $1 million in CDs that all renewed at one time, and they were renewing at 0.3%. Now they were coming off of a 3% 3 or 4 year renewal, and they were dropping to less than 0.5%. And they were using that interest to supplement their vacations and things like that. Well, on 0.3%, you're not going to go very far. But in getting to talk with them more, since they are good clients, I started digging into what we would offer. Now, and when I say what we would offer, it could be a single pay life, it could be an indexed annuity, it could be a MIGA. Okay, this particular one went to an indexed annuity because they already had one with us and they knew about that. But it could be a single pay life contract, with one of the carriers. There's some good carriers that got some real strong, almost 100% liquidity from day one. But here's some of the advantages of moving it from a CD to one of our products.
Okay.
First of all, it becomes tax deferred as opposed to taxable. And I was always taught a bank CD is taxed as you earn the interest. What we offer is taxed as you use the interest. Ooh. So if you don't pull the interest out, we don't send you a 1099. Bank sends you a 1099 regardless. Yeah. And what does that do? That affects your Social Security benefits because it goes on your tax return. Right. And on ours, if you don't pull the interest out, it's not calculated on your tax return that year. So there's a lot of moving parts. But I came up with another little phrase that I like, or word. Instead of saying inflation, I say reverse returns. That's what I say, because they haven't heard that. And when I say reverse returns, well, what are you talking about? Well, if you got a $100,000 CD, 1 year from now, it's going to be worth around $96,000. Well, how can that be? Because we're at 3.5%, 4.5%. We're actually the last 90 days, we've been at over 5% inflation. Okay. So when you factor in inflation, but I try not to use that word inflation because everybody's heard it all their life and it gets watered down in the comments. But inflation is real math that people need to see. Okay. And if we stay at 5% inflation, I did a little homework on this. At 5% inflation in 15 years, your money is worth half what it is today. Mm-hmm. Okay. And I went back and checked because I have a program called Circle of Wealth, and it's got an inflation program in there. I can go back and type in the year that you got out of college, the year that you went to work, and determine what the inflation rate has been since you've been in the workforce. I pull my own. I started my career in 1976. Inflation has been around 3.7 or 3.8 during my working years. So when I tell people, if you're using 2 to 3% inflation in your calculations, you're missing the boat. It hasn't been anywhere near those lower numbers during my working years, and I'm one of the older guys on the team. Yeah. So a CD is working against inflation. You're getting no interest and you're paying taxes. So if you calculate inflation, or what I call reverse returns, and then you throw in income tax on the interest, and you throw in 0.3% interest, even if they get to 1% interest, it's still a no-brainer. But they're going backwards. Yeah, they're literally going backwards. Yeah. Now, I do tell people, before I forget, don't go get all your money out the bank and bring it to me. You need to leave money in the bank so you can walk in a building and walk out with some money, okay? Because there are going to be hurricanes and storms and, car repairs. I mean, we don't go drain your accounts. Right. But if you got money there that'll never be used, that's strictly for legacy for kids and grandkids, it makes no sense financially to leave it there.
A lot of people have that. And McCarty made this pretty popular for a while. Sleepy money, it's like just this money that's just sitting on the sideline asleep. Yeah. And a lot of people got it tucked at the bank because of the liquidity needs. Mm-hmm. And some people, I mean, I'll tell you, we've looked at a number of statements and, people going into their third appointments with federal employees or something like that. And they've got $400,000-500,000 in their checking account. Mm-hmm. It's just sitting there, so it's even worse than the CD scenario. Yeah. And you're like, okay, well, there's no need. What was the purpose of this? Like why do you have this liquidity here? Well, yeah, it's liquidity, or, they don't even have it tucked into their savings account or anything. It's checking. And you're like, dumbfounded by the whole thing.
Yeah. I had a prospective client come in the other day. He's still a prospective client. He hasn't, his wife has done some business with us, but he did have over $600,000 in a checking account.
Yeah. And it's depreciating, account. Like you said, with the reverse interest. I like that. It's like 5 to 6%, whatever you want to say. But the buying power is just going down, 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 especially like look at the gas prices so high right now. Yeah. I mean, all the obvious signs of severe inflation have happened in the last 5-6 months. At least that I was taught as an economics major. You know what I mean? So,
well, and I find that most producers, they love to run illustrations. I hate to run illustrations. I just talk about things and tell stories, and I take a legal pad and I draw out what's happening. And I've got an illustration to back up whatever I'm saying.
sure.
But I don't use the illustration as a sales piece. But if you're going to do that, then go ahead and run illustrations showing the impact of inflation. Don't just say you're impacted by inflation. Show them real math. Okay, show them 100,000 in 10 years what it's down to.
So run us through. That's a good transition. Run us through how you approach the conversation with the client that you rolled the 900,000 with.
Yeah. Well, I first of all told them this: we're going to pay you considerably more interest than you're earning now. In fact, it may be so significant that it may be hard for you to comprehend how an insurance company can give you those kind of returns versus a large local bank that can't. Okay, I said it'll probably be more difficult for you to believe my math is correct, and I said, but I'm going to show you 10-year historical numbers so you can understand that. And then I get into, now I try to ask them a few questions. If I don't know the person, do they have an extended family? Okay.
Right.
Because stepchildren, and in Louisiana, and I know there's 7 or 8 other community property states in addition to Louisiana, but in Louisiana, as soon as you move that money from a bank to an annuity or a single pay life, it immediately escapes probate. Wow. And you can name the beneficiary that you want. You do not. In Louisiana, we have something called forced heirship. Okay. So in addition to community property, we're still under something called Napoleonic Code from Napoleon Bonaparte days. And so we cannot disinherit children. I mean, property and assets have to go down to children, in a specific order. And when you move it from a bank to an annuity, you immediately skip that process, and it overrides a will. Yeah. So that's a big thing right there is being able to name who you want. The other thing, and I told these people this because we all live in this small town. And of course, y'all know my wife just passed away. So I'm dealing with the succession right now. And I know for a fact that I did not, when I went through this succession process, I didn't have to declare any life insurance, any cash value of life insurance, or any annuity cash values, because they're not part of a succession process. Right. Okay. Now in a small town, and I go to church with my attorney, but I don't want him knowing all my business. Okay. So a lot of my business he still doesn't know because he can't ask me those questions. Right. But also in a small town, that's going to be public record. Okay. And in a small town, there's a lot of people that read every legal notice to see what's going on, who sold property. And so even though some of my business will be in the paper, a lot of my business won't be in the paper. Wow. And so it's a private transaction. I tell people, when you do business with me and you need money, I'm the only guy in town that's going to know you took some money, except wherever you go cash the check, they'll know. Okay. So that, I get into a lot of things that have nothing to do with interest rates. Right. I'm not just trying to beat pure math. Okay. Because you can't always beat pure math. I mean, 10 years from now, CDs may be 8 and 9%. And then if you only sold it on math, you can't sell anymore. And, we happen to be in an environment right now with interest rates low and inflation on the rise, where what we offer, and my son-in-law gets tickled because my whole closing statement is it's a no-brainer. That's all I ever say. This is a no-brainer. And mathematically, it is absolutely a no-brainer. You don't really have to have many sales skills in today's marketplace for what we do, because our math just simply blows away other math. Right. And I wrote down, because sometimes I'll ask a person, I have these 4 actually typed up, and I ask them to rank them in order: safety, liquidity, high returns, no fees, and tax shelter. Okay, that's a perfect investment. If you had an investment that had no fees, no taxes, high returns, total liquidity, and 100% safety, that's a perfect investment. The problem is that investment does not exist. There is no such thing that has all of those characteristics. So you have to pick and rank which ones are higher. So if somebody didn't check off, high returns, I might move to a MIGA contract. It doesn't matter what they say to me. I have a product that matches whatever configuration they rank that in.
Yeah.
But people in CDs, they do want safety. They do want no charges. And they do want liquidity. That's what they're accustomed to having. And, depending on what product you put in, they may give up a little bit of the liquidity on the front end, but most of them haven't touched that money in years. They just went in and renewed it over and over again.
It's about finding the purpose there, right? It's like you got to find the purpose of that money. What did you put it there for? And then the liquidity goes away.
Right. And most people over 60, the purpose of the money is a rainy day or leave it to my kids or grandkids. They have no intention of using it for anything else. My mother was 85 years old, and she still, after 4 bypasses, said, we're not touching our CDs. Now, that was back in 1995, because she kept saying that was for a rainy day. And I said, Mom, you're 85 years old. You had 4 bypasses. How much rainier can it get than today?
It's boring outside. Come on.
But she wasn't touching those. Okay. She was not touching those. And, the biggest problem you may have with the bank would be the FDIC insurance question. Okay. It's federally insured. And I explained to them, I said, well, let me tell you what FDIC is. Federal Deposit Insurance Company. Banks pay a premium to belong to those. Okay. And you're right, it is federally insured. Okay. So you do have that. And I tell them an indexed annuity company, though, can only loan out $1 for every dollar that you have on deposit with them.
Right.
Banks can loan out $7 to $8 for every dollar that you have. So that's why more banks do go under, even though you're protected. But that's why more banks go under than insurance companies do. And I tell them, I said, I always remind them, I didn't say move all your money here. Okay. Right. But how much, if you're getting 0.3% and I can give you 5, how much are you paying for that federally insured money?
Yeah.
And then of course, whichever insurance company I'm using, I go back and show them how long that company's been in business, how long they've been admitted to the particular state that we're doing business in. So, I give them some background on that company. And I give them a lot of information on the indexes. If I'm using an index product, I really give them more reading material on the actual index than I do the actual insurance company, because that index is what's driving their returns. It's not the insurance company specifically. But that's probably the biggest hurdle is that FDIC question. Yeah,
it's funny because it's like, when people are. It sounds like the real argument you're having with the CD argument is like how much you value that liquidity. That's the real conversation. Right. Is are you willing to forego 5% or 4 and 8/10 or 4 and 7/10, whatever you said, 0.3% they were getting on that on that CD.
Yeah.
Right. So 4.7% growth over X amount of years, whatever amount of years, even 1 year, that's a lot on $900,000, right?
Yeah.
How much do you value the liquidity? Because you're still getting the no fees and you're still getting the security. And then the FDIC conversation, of course, is one to be had. But again, you're still
another thing you'll get asked is, well, mine renews in 3 months. Okay. So let me wait till it renews.
Yeah.
Because I don't want to suffer the penalty.
Yeah.
I said, well, let's see what interest rate you're earning. Because if you're only earning 1%, waiting 3 more months so you don't have any penalty, it's still better to go ahead and move your money. Okay. Yeah. I mean, that doesn't make any sense.
So how does that work? They charge you the 1% for each month, or what? I mean, what do they charge you?
Yeah, I don't know. Well, yeah, they factor in how many months you got left, and
it's like a pro rata.
You give up a little bit of interest. I mean, you're not giving up any principal, whatsoever.
Yeah.
But you're actually gaining. It's almost like replacing a say another annuity with an annuity, if you've only got 1 or 2% surrender charges left, but you're being charged a 1.4% fee,
Sure,
it still makes sense maybe to move that because the fee is overriding what little bit of surrender charge you've got. Same thing with a CD. Yeah.
Get a bonus product or even something like that. You could potentially.
I mean, shoot, you're talking 0.3%. You could put it in a MIGA and still get a better rate, right? It's still worthwhile.
Right.
I mean, honestly, it's it's an interesting conversation to have, and insurance companies are changing rates all the time. I would probably just approach them with that and say, look, there's no guarantee that by the time 3 months from now hits that this insurance company will be able to offer the same kind of rate lock scenario. So it's like a rate lock on a mortgage, right? We know these index rates could change. If you were looking at this annual point-to-point annuity or FIA or whatever we're talking to them about, or a MIGA, right? MIGA rates are changing all the time. If I'm selling a 5-year MIGA to this person as a CD alternative, we know how crazy that market can be. Up, down, up, down, up, down. They offer it until the end of the month. I mean, I'd be having that conversation immediately. But what I noticed that another advantage to an annuity or a life insurance contract, especially there in Florida, where you guys in Texas, I believe those two states have 100% creditor protection on insurance contracts, where they don't on banks. So if you did get financially upside down, they, and in Louisiana, I believe the number's 36,000. So we have some protection, but the bank, you have no protection. And I will say this, it's a little bit easier. If you end up in a nursing home. I'm not going to say you don't have to declare the money, but if you've got life insurance cash values and policies, they can't make you cash those in to use those funds. Okay. Right.
And
makes the case for a single premium life policy.
Absolutely. I mean, just the whole argument wrapped around having living benefits on an annuity or life product versus a CD, right? You don't have any doublers on a CD. I mean, that's a whole different angle.
But what I noticed that, Johnny, you're doing, at least in the sale, let's talk about the sale perspective. You approached it with, and I'm going to butcher what you were saying, but you went out and you said, okay, here's what I'm going to talk to you about. And the numbers, you're almost not going to believe me about the numbers and such and all the different features and everything like that. You're preempting the objections that would come, which I don't think advisors do enough. Is like phrase the objections before they even ever come up, so that when it does come up in their head, they know just to disarm that and just forget about it.
That's right.
Forget about it. I was having the same conversation literally on the phone before we hopped on here with another advisor dealing with a client that was on the G fund. I was like, look, if you tell them you've been in the G fund, haven't made over 2% in 10 years, and you're saying I've got a product that's the same safety, even more so, there's no downside risk at all to it, right? You have a floor, you can't ever lose your premium, and I'm going to get you 9%. Like, it's not real to them. It's not fathomably real.
Right.
But I love that he's doing the preemptive part of it with any objections. Is like the more you, like, I find myself doing that a lot. Is like, if I can just, if I know what to expect from bringing up a certain conversation in a sales process, and I can disarm those objections prior to, it's like, I mean, that's the ideal sale, right? Like if you have done this enough.
Well, I mean, that's no different. Like my grandson playing college football, they're watching the other team's films so they can see what they're going to do and go ahead and plan ahead of time to protect against that. So if I know, I know they're going to mention FDIC. I know that. Okay. They're not going to mention probate because they don't even know that that's an issue. They won't even know that. So I'm going to bring up an issue that they should know about, that they won't know about.
And then
now,
answer it.
I'm in a different, and I'll be honest with you guys, since we recorded our last session and y'all know what's happened in my life, I have a whole different perspective about things. And I'm not going to let people, I'm just not going to let people win a debate with me about death or bad health. It's not going to happen with me. Okay. And I'll stop them real quick. And I'll say, my son's had stage 4 cancer. My sister died of heart disease and my wife recently died. So you're talking to an expert consumer here, not just an expert financial advisor. Okay. I'm walking in shoes that you're going to walk in one day. I'm just already walking in them right now. But 100% of the people will walk in the same shoes I'm walking in.
Yeah.
And so it brings a whole different level of my soul
Conviction.
out, because I'm talking from a belief system, not from a textbook sales training system.
You're talking with conviction
but,
and confidence. And,
it's conviction. It's total conviction. Yeah.
You know you're right. You know you're right. There's power in that.
Right. Right. That's exactly right. So, we talk about that HITS formula all the time: healthcare cost, inflation, taxes, and stock market risk. And what we do, whether it's moving CD money, whether it's rolling 401k, whether it's rolling federal TSP, we are addressing those issues. That's what we're addressing. We're outpacing inflation. We're giving them some tax sheltered acts, and we're eliminating having to watch Fox or CNN Business News, whichever channel they listen to see if the S&P dropped 500 day, the S&P broke all records day, S&P had the worst day it's ever had. And my big deal about averages is, are you average? No, I'm not average. No one person is average. My sister died at 64. That's not the life expectancy of a female. The average life expectancy of a female is 80 something. Average didn't do her a bit of good. Average didn't do my wife any good. Okay. So if you're going to talk about averages, I'm not the guy to talk to. I talk about how much money will be there the day you need to pull some of it. That's what the math has to be. It's not averages. Okay. And when the market's, we all know that when the market's up, I'm not going to take it out right now. It's doing well. When the market's down, I'm not going to take it out right now. I'm going to wait till it gets back up. That sounds exactly like somebody goes to a casino to me. I'm going to keep playing. It's their money right now. I'm going to keep playing to try to get my money back. It's the same. It's the same conversation. But I'm getting off the CD track here. But, I will say this. We've actually had bankers calling here recently because they have seen money leaving their bank and coming to us. I mean, I literally walked in the bank a few weeks ago and stood there while they wrote me the check for the client. Okay. And I told the lady, I said, look, this is awkward for me. I'm not used to going to a competitor and standing here while you pay me. And she said, well, Mr. Johnny, we know you, so we know you're treating the customers right. And I said, well, okay. But, they called here to want to know what we're doing.
I'm sure. I see more and more banks bringing in insurance professionals too, just so that they can offer them too. Having and some carriers even have bank channels, right? Because they've become so powerful in it.
But I mean, everybody that's listening, though, you need to ask 100% of the people, when does your next CD, if you have one, renew?
Right.
Would you object if we got with you and gave you a side-by-side comparison? Okay. Of all the benefits, versus that. And who's going to say no to that question?
Would you have any? The difference in this situation, or it has literally been the difference between thousands of dollars and tens of thousands
$1 million.
of dollars. Yeah. Right. So it's like of income, right?
Yeah.
Annually.
Especially for them. Yeah.
But I just keep coming back to the fact is, like, as far as lessons for Coffee for Closers audience, it's like I keep seeing Johnny over and over and over doing that. It's a war, or it's a battle with the prospect, whether you like to admit it or not. It's a battle with the prospect of what they're almost trying to come up with objections to whatever. And if you're able to preempt those objections, it's showing the prospect that you've carefully thought out all of their objections. So if they reach those objections in their head throughout, one, that
you just remind me, the one that moved a big chunk of money, almost $1 million.
Yeah.
You know what they asked me at the end? He says, Johnny, why is everybody not doing this?
Yeah.
I said, they don't know about it. They don't know about it. And I said, that brings up a good point. I need you to help spread the word. Okay. That's where you go into that referral mode right there. But that literally was I was asked, is why isn't everyone doing this?
Yep. But I'll tell you, man, that's what's made you successful. And for those watching, is Johnny is an absolute rock star producer. He produced, what did you do last week or whatever? You submitted some couple million almost.
Oh yeah, we had over 2 million last week.
It was a huge week.
Easy. Yeah.
And you've been obviously, going through a rough patch here, but honestly, it's man, you guys have been on fire from a business perspective.
And let me tell you what, where I live at, our whole county has less than 15,000 population, our whole county. Okay.
Yeah.
So you don't have to live in Atlanta, Georgia to do what we do. Okay.
No, and oftentimes the biggest producers don't. A lot of times the biggest producers are in small towns like Gina, where they don't have to, compete with the large bank. Like you go to look, for God's sakes, look at New York City. I mean, they don't even allow annuities to participate in the world over there. So you're talking big cities have a lot of competition, and so therefore, it doesn't play well to the independent channel, I don't think. But, certainly exceptions to that rule.
I think the other huge part that Johnny's always done that I've always enjoyed and is still doing, like you said, setting up a calendar to have all these people, not just have the conversation, right? I think that's what a lot of advisors do. They'll have the conversation of, when does your next CD mature? When does your next CD expire, right? And they'll tell them in December. You're like, all right, cool. And then in December, nobody ever gets a call to fix that CD, right? You just put it on the folder, you move it on, and you move to the next clients. And you guys have always done a phenomenal job of creating that chain to get back into people's lives and actually move the darn business and help them out, right?
Yeah.
And I think a lot of people, now that we're mostly getting out of COVID and getting through 2020, are getting away from all the things that were keeping their business alive and keeping them writing business. And now that they can do marketing again, have stopped doing client reviews, to stop doing all the things that floated them through that year. So I think it's super key to continue the stuff that was doing well for you last year, and then start adding on the things that were doing well for you in 2019, 2018, and 2017. And that's how
they finally realized the power of referrals and the power of nurturing their clients and
building
so on
a client
and so
base.
forth. But
true client base.
But we were just talking about this yesterday too. Of like, a lot of advisors have forgotten the need for marketing, and there's like another big bubble. Is like there is an end to, or a cap to, how many you're no longer working or providing yourself with your future of the prospecting funnel. You're now relying on your clients to be completely responsible for nurturing your pipeline, and that's or to filling your pipeline rather, right? And so that's a dangerous game because you forget to market. It has to be harmonious. What I think we should take from a lesson from the pandemic is the fact that client nurturing and referral systems can be some of the most beneficial things to our practice and some of the easiest sales in our business, right? Layups when somebody's already referred you, right? Same thing though. We can't forget the things that we knew prior to the pandemic, prior to discovering the world of referrals, which, people like Johnny have always done, but for a lot of advisors have not. Okay, you've learned about referrals, but don't ever forget what got you to the dance in the first place, right? It's like whatever.
Just keep doing both, right? Just like keep doing your hard marketing, keep bringing new people into the top of funnel, and then do what Johnny's doing and build a good system where you have a reason to get back in touch with the people and continue doing it. That's all I'm saying.
Yeah.
I'll tell you, even the simplest thing, like 4th of July, sending an email with a 4th of July banner to your clients. Happy 4th of July.
Yeah.
That gets us business.
Oh, for sure.
Birthday cards. And I've got to fix that system now because Nelda was in charge of that system.
Yeah.
But birthday cards got me business.
Yeah.
Okay. Promoting my high school athletic team here. I just paid to sponsor one of my granddaughter's soccer, her high school soccer team for the year. Right. My name will be blasted out there. Okay.
Cool.
But people want instant gratification. They don't want to spend any money unless they're going to get paid by the end of the day. I try to look 2 years out, not this Friday. If you're going to do something to get business this Friday, you're not going to have anything to do. But referrals, when you said referrals, I had a gentleman call me about 6 months ago. It was a strange phone number, and I knew it was West Virginia. And I can't remember his name, Mr. Taylor. And he says, are you Mr. Rozier? I said, yeah, I am. I said, but most people call me Johnny. So I just watered it down real quick and made it humorous. And he says, well, Johnny, you helped one of my coworkers, Mr. Jerry, roll his money. I said, yeah, I sure did. And he said, well, he told me to call you. I said, well, I appreciate that. And I said, how is he doing since he retired? He's doing great. I said, well, what can I help you with? He says, well, whatever you did for him, just do that for me. I didn't make a presentation. I literally did not make a presentation. He just told me whatever I did for him to do for him. $160,000 rollover on nothing more than a recommendation. Now, and why did Mr. Jerry do that? Let me tell you what Mr. Jerry did, the guy that gave me the referral. I personally, Neld and I last October took our motorhome on a vacation, but on the way back, I promised Mr. Jerry, who had done business with me through a Zoom meeting, I promised him that we would drive over to West Virginia area on our way back. And if he would drive to the campground, because I wasn't going to drive that motorhome up in those mountains on side roads, that we would make him some Louisiana jambalaya. He did drive to the campground. Nelda cooked him jambalaya, gave him a plate to bring his wife. That probably is what got me that referral. Nothing more than something like that, but you've got to treat people. You got to get them to like you. I mean, you got to have a likability feature. If you're just very monotone, very business-like, stuffed shirt, they don't want that anymore. The
world's changed, man. It definitely lends itself to being friends with our clients. That's what people, we've always heard that people want to do business with people they like. And of course that's true. But there's also there's advisors that do that very well, but also keep themselves at bay. And I think those are advisors that are finding themselves in 2021, finding the need to be very close with their clients. Client attention prevents the need for client retention. You know what I mean? It's like you don't need to retain these clients if you've always been paying good attention to them and nurturing them, and they'll come back and serve. Again, there's no payment at the end of the day for that investment of time, energy, and sometimes money.
But it always pays dividends.
But it pays dividends long term. In the referral business.
Another thing I've learned, and this doesn't have anything to do with CDs per se, but getting referrals and client reviews, that you brought that word up a minute ago. I found something at an insurance company website called a financial workbook, and it literally is a 6 or 8 page document to give to a client so they can put a list of everything they've got together. Okay. And again, I'm having to do that. The advantage I have, I'm in this business. So I knew where everything was at. We had all that put together, but it's still cumbersome to file claims because your mind is not even wanting to file those claims. But I can't comprehend the average consumer that doesn't have someone like us that can get all that together and help them do that. And in my own wife's case, let me tell you where the mistake is there. One of her claims was kicked back. The state of Louisiana on her death certificate typed the social security number wrong. It doesn't match. Okay. You know how frustrating that, and it's frustrating for me, but I know how to fix it. But people don't realize you better get your act together, and you need to do it while you both got your right mind and your health, because you don't want to do it when you're in a morbid feeling situation.
There's just so much to chat on, man, and if we weren't time constrained, Johnny, we'd just keep picking your brain.
I know. I could talk all day.
It's such a wealth of knowledge, man, and obviously you're doing things well, having the best year of your career thus far as I know. But
I am.
It has been a phenomenal experience, and last week was no slouch as far as the business side of things go. I know you've had a little bit of a rough patch here, but congratulations thank you, I should say, not congratulations. Thank you both for coming in and sharing some knowledge on the CD sale. But again, general topics for anybody watching to better understand just sales in general, how he approaches the conversation, how he builds a friendship and sets himself up for the referral conversation and client appreciation and such. Just impressive stuff, Johnny, as always. Thanks for coming on the show and sharing some.
Thank y'all for having me. I enjoyed visiting with you guys today.
Yeah.
Always, brother.
Always, man.
Thank you.
All right, everybody. If you like today's episode, don't forget to like, comment, subscribe, share it with your friends. We appreciate you joining us here on Coffee for Closers. Johnny, Mr. Johnny Rozier gets the coffee this week. Good job, my man. Not that you needed that from us, but yes, we appreciate you watching. And if you have any inkling or want some more information on what Johnny's doing in his practice, you can feel free to comment in the comments below, or you can message us directly, whichever floats your boat. Rick, as always, thanks for being here.
Good, man.
And we appreciate y'all. We'll see you right here next time on Coffee for Closers. Take care.
Thank you.